Welcome into Clear Picture Financial. Your host is Jason Noble. You can find Jason at Prime Capital Investment Advisors right here in Charleston. And hey, good morning, Charleston. Absolutely great to see you. Chucktown. I'm Morgan Patrick, consumer advocate. A little bit more about Jason. Of course, fiduciary advisor, holds his FINRA Series 66 securities registration, certified financial planner, and retirement income certified professional with over 18 years in the financial arena, helping his clients get ready for their retirement. Jason, always good to see you. Always good to talk retirement. So let's get into this. We spend a lifetime getting ready, preparing for retirement, or do we? We sent our very own Dave Perkins, our street reporter, out into those streets to ask people about their plans for retirement. Now, retirement preparedness, according to a survey by Transamerica Center for Retirement Studies, only 17%, listen to that number, 17% of workers are very confident that they will have enough money to retire comfortably. And then 56% of the workers out there that were surveyed, they plan to work past the age of 65 or do not plan to retire at all. Let's get some of those comments from our streets.
It's a pretty comprehensive plan that takes into account all of our assets, real estate, everything.
I'm going to work as long as I can, and then I'm going to enjoy my grandchildren, great-grandchildren. That's my plan.
I've got rental properties, stock account, savings, bonds.
We are saving money out of our monthly paycheck and trying to slowly start building up a savings.
Again, hitting the streets, just curious as to what people are doing when it comes to retirement planning. And that's just a montage. I mean, what do you think of those responses? I mean, are they fairly typical? And what advice would you offer up to the people that we heard from?
Yeah, we heard from quite a few, didn't we? I mean, there was some that were saying stuff that I really liked hearing, actually, like the rental properties and multiple streams of income coming in throughout retirement. I think that's so important to look at. What is that reliable income source, right? But then there was others like, oh, we're trying to save. And I get that. I love to hear that they're trying to save, but are they doing it with a plan in place? Mm-hmm. Like, where are they putting that money? How much are they putting in? Are they finding out where their money went, or are they telling it where to go, right?
Right.
And then that's a big part of retirement planning, is not just about where you're putting your money and how much are you saving, but like, where's it going for the end goal in mind? And how do you account for taxes down the road, for here and now, but also for down the road? That's such an important component. And then there's this one other thing that I really stuck out from another person that was speaking. I really like that he said that he had a comprehensive plan. Is that fairly typical, though? What I'm seeing, obviously, is when someone new comes into my office, is they have what once was a plan. Right. It hasn't been updated.
Yeah.
And it was only looked at from an accumulation of a growth perspective, not also how to look at from an income distribution approach. So I would say it was a partial plan. And when you build out a complete plan, that is when you're looking at both sides of the equation, how to grow the money, but then how do you have that money set for income streams throughout retirement? And that's what we focus on with our clear picture analysis.
I tell you, we are in the middle of just, getting out in the streets and getting comments on so many different things when it comes to retirement. But you're locked into Clear Picture Financial, Prime Capital Investment Advisors, the power behind the program. And we do this show to help. There's going to be an opportunity to get on the calendar with Jason and his team. No cost, no obligation, no pressure. That is coming up here in just a little bit. Jot this number down, 843-743-2926. Or you can also text NOBLE, N-O-B-L-E, to 600-700. And you can get ahead of the line there, and you can do it right now. That's 843-743-2926, or text NOBLE, N-O-B-L-E, to 600-700. So we thought it would be interesting if we brought up the A word on the street. That's right. When it comes to annuities, everybody's got an opinion.
What are your thoughts on annuities?
I don't like them.
Why do you not like them?
Well, annuities tend to pay the broker or the salesperson a lot of money, and anything that pays a big commission is not generally good for the client.
Again, Dave Perkins, our man on the street. Boy, I tell you, our subject there did not hesitate. He said, I don't like him. He makes a point, and one we've covered here many times, and it depends on what kind of annuity. Now, do you think the attitude towards annuities, well, is it changing, Jason, and why or why not?
I will say I think the attitude towards annuities are changing. And the reason why that is because when I first got into this industry almost 20 years ago, they were not something that I looked as a viable solution for a lot of people. There was, to that gentleman's point, high commissions. They were very advisor and carrier focused, being the insurance company focused. Where I think the attitude is changing is over the last, I would say, 6 to 7 years, I've started to see more and more annuities coming out that are more client focused and client centric and less advisor and less carrier. And I think that's where the industry needed to go. So I do see the attitude changing. And as a fiduciary, my obligation to my clients is to do what's in their best interest. And I can't put any biases in front of that. So I did have a bias in front of annuities because of how they were first built, but seeing how they are now, I do see them as a viable solution for the right situation, for the right person, for the right goal in mind. You can't throw the baby out with the bathwater. I will say there's some out there that are still really bad and client and advisor focused. And this is where the buyer has to beware. And every advisor should provide you their commission schedule before and as they make the recommendation for that full transparency.
Well, let's go over the pros and cons real quickly. I mean, because when we get into annuities and we start mentioning the word quite a bit, as we've mentioned, with our street reporter, kind of the cockles on the neck, they go up, man. The hairs stand up. People are concerned about it. What are the pros and what are some of the cons?
Let's go into the pros. So you got the guaranteed income, and you could do that through like an income rider, or you could do that through annuitizing the annuity. Of those two, I'm not a big fan of annuitizing it. And if you want to know more, that's where you could reach out. We could talk through it. Another pro is tax-deferred growth. The earnings on the investment with an annuity are not taxed until the annuitant starts to withdraw them. There's no contribution limits. Unlike retirement accounts, there's no limit to how much an individual could actually invest within those annuities. And there's also protection against downside markets. Some annuities offer protection against market volatility, and it could be appealing for someone who's risk averse. Now, here are the negatives, the cons, right? Fees. Annuities have high fees, including surrender charges for early withdrawals and administrative costs. So you got to be aware of those things. You still can make withdrawals. You just have to make sure you're below the free withdrawal rate. You have a lack of liquidity. What I mean by that is they say, hey, you cannot withdraw more than 7 or 10%. Well, you need to make sure you have other assets to be able to access because they have a lack of liquidity. After a certain period of time, they then say you could withdraw 100% of it, giving you full liquidity, but you got to have that time horizon when you cannot touch it.
Okay.
There's limited growth potential. The rate of return of annuities are typically lower than other investments such as stocks or stock mutual funds. And there's also the loss of principal. Some annuities offer a guaranteed return, but others do not. And the annuitant may be risking losing some or all of their principal investments if the market is performing poorly. So this is something that has to be taken into account.
Well, and yeah, you have that conversation. You come in, you meet with Jason Noble and his team, and you see if there is a particular annuity, because there are many, and there might be one that would be a good fit for the portfolio, but that takes a conversation. And again, we're going to open up those spots here in just a little bit. So very important, again, to consider what your financial goals are. And as you're moving towards retirement, maybe, possibly an annuity might be a good fit. So when it comes to planning for retirement, it's very important to start early. And that seems to be happening more and more today, which is good news. Dave Perkins, again, our man on the street, found someone who seems to be on the right track at a very early age.
Now, you're probably a long ways away from retirement, but do you think about it? Is that kind
Yeah, I mean, of course. I mean, I do have a retirement plan set up, of course.
Do you, are you aggressively contribute to that, or how have you got that set up?
Well, I do $300 a month.
So you're actually thinking about retirement then?
Yeah, I mean, I can't work all my life, and these bones don't hurt that. These don't work.
Do you worry about Social Security being there for you?
Yeah, because they're using Social Security for other needs that's not supposed to be meant for that. So.
All right. So, Jason, just your thoughts. I mean, that's a young person who is ahead of the curve, I would believe. She seems to be doing quite well as far as what she's putting away.
I really liked a lot of things that she said. You know, there is more of a pressure for our younger clients to have to save more and be prepared earlier on because of the changes of Social Security that are around the corner. And the conversation I had earlier with one of my clients, he goes, man, I wish they had Roth IRAs when I was younger. Right? They didn't come out until I was later on. Right. And I have clients that are younger, and we're taking advantage of these Roth IRAs and putting them in a really good position for down the road in planning. But you have to start. Right. And what she's doing is $300 a month. If it's $50 a month, you got to start somewhere to be on the track towards your financial goals. Well,
I mean, just a tip of the cap. I mean, if you're putting away $300 for your future, that is fantastic. And that's good news. And people can learn from just hearing, you know, a younger person out there that's very interested in retirement planning, and you're never too young to start. All right, well, let's help some people out. We've got spots on the calendar. And again, these are no cost, no obligation, no pressure. Jason, walk us through what's going to happen.
Well, listeners, it's time to act. With all the unprecedented of what's going on in the markets right now in the economy, and the world's important to be proactive and not reactive to this situation. Take that first step right now by calling in and speaking to one of our specialists who will schedule your custom core values meeting with me. This is where we get to know your story, the story of your money, and any concerns that you have right now. This analysis will include a fee report and risk assessment to help you recognize unnecessary losses in your portfolio and see if by simply protecting your retirement investments, you could experience dramatic growth potential. Second, we'll perform a tax analysis to review how you could possibly reduce your taxes and increase your cash flow. We'll also develop a customized income plan utilizing proven strategies which could strengthen your retirement income and take the worry out of living in retirement. In short, we're going to take the guesswork out of financial planning for you. So the next 10 callers, this is a comprehensive financial review that we're providing complimentary with no obligation.
All right, here's the number to call, 843-743-2926. Again, 843-743-2926, or you can text NOBLE, N-O-B-L-E, to 600-700. Again, 843-743-2926. This is complimentary. That means free, folks. Text NOBLE, N-O-B-L-E, to 600-700.